Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets. Tomorrow, the daily market analysis show. We look at what happened in the market during the day and how we can plan for a better trade for the next day. So, this analysis is for March 10th, Thursday and expiry day tomorrow, 2022. What kind of day we had? It was a bull rally. The rally continues. The relief rally continues, and the bulls lift the index ahead of an expiry day, weekly expiry tomorrow. So let's see more details, right? So as usual, the pre-market analysis for the next day, March 10th, Thursday, weekly expiry would be based on all of these parameters that you see on the left. On the left side, we will be looking at them in the charts, and we would have additional data analysis and on all the parameters that you see on the right side. We will also have a rather than actionable, right? So look at this, right? That's a second wide range bullish candle that you see there. Clear bullishness bounce. That's a 5% bounce from the top, from the bottom. BANKNIFTY also made a decent bounce, right? And here we had a gap, and the gap is closed, right? The window gap resistance is closed, but here the gap remains open. It's not fully closed, right? So that's about it. So that's 332 point gains in single day in Nifty today, 2% up move, that is it, right? So it's a continuation of the rally, and it's a wide range bullish candle as we have seen. Gap is closed. Fibonacci 61 level also is closed, right? And but the thing is, the price action is in a trend line channel on the downside, both the indices, right? A double top pattern can be seen on the weekly charts, right? We are at the neckline, and that is where from the neckline that we have bounced up. So you have to keep that in mind, that this double top bearish pattern is still there. We are at a support zone from where we have bounced up 2 days. BANKNIFTY 2%, 657 points. Yesterday was very weak bounce, but today, look at this, the bounce is clearly established. Yesterday it was after making a low and hitting the bottom when the bounce happened. Today it was straight up continuation bounce that happened in the Nifty and the BANKNIFTY also. So 657 points, wide range bullish candle. Fibonacci 61 also is taken out, but the gap is not closed. Right, and that is also in a trend line channel, double top, so visible on the weekly. Intraday price action, this is what happened, right? Now you can say from the beginning itself is trending upside. Clear trending day on both the indices from the 15-minute charts from Nifty and the BANKNIFTY. And Bollinger Bands, the expansion has happened on both sides. Some kind of contraction is happening on the upper side, but clear breakdown has happened on downside on price on the lower bands on both indices. That definitely indicates that the bearishness is there. Recovery may be happening, but until it moves about the median, there is it continues to be a bearish indicator that's given by the Bollinger Bands. Support resistance zones, let's quickly go through that. It's at a support 16. Right now, so there's some mistake here. This is not a resistance, this is a support zone. So the 16200 is a support, right? So it's clearly closed by about 16300 today. 16200 is support. Then the support below is 15850, 15900, which is the Fibonacci 61, which has gone good today. And below that you have subset 15500, 15650, that and then 15352, 15450, which is the major support zone. So on the upside, resistance would be 16350 to 16450, which is the Fibonacci 40. Now that is where it has got stuck today, and we'll have to see if that is clear tomorrow. Then it goes to 16550 and 650. That's the resistance. Above that 16700 to 16750. Then above that 16800 to 16900, which is Fibonacci 38 retracement. And so this gap that you see in the box, that is cleared today. That's no longer valid, right? And the next gap would be above, closing will happen above 17,000. That is when it will break out probably from this channel also, right? Trendline channel also. Any close above 17,000 will be solid. Similar on the right side, BANKNIFTY, you can see that the support is 31,800, 32,100 is the last support. And above that you have another support that is close to where it had gone down today. That is 32,400 to 32,800. And the resistance would be the gap which is not yet cleared, the first gap that we have, right? So that is at 34,000 kind of levels. So once you have a close above that, because that gap is Fibonacci 61, so that's not Fibonacci 61 is almost close, right? But it has to climb above that zone, climb above the gap also. So this is a major zone. So clearing 34,100 would be a major hurdle, and for Bank Nifty, and then above that you have 350 to 750, 350 to 34, 750. That's one is in resistance. Above that you have 35,000 will be a major resistance with Fibonacci 50 retracement level. Above that you have 35,900, which is again another resistance, and then above that you have Fibonacci 38, which is coming near to 36,000 levels, right? 36,300 to 36,800 Fibonacci 38 levels, and above that you have the gap, another gap is at 37,000 level, and so then above that you have 37,500. So only after clearly having a green close above this gap is filled, 37,500 is filled, only then you can say there is any up move. So Bank Nifty has got a major hurdle ahead in the move, but the kind of moves Bank Nifty when it comes back makes also big, right? Bank Nifty, the two resistances are open here. One resistance is cleared, right? Bank Nifty, that is so making out of this support resistance levels, right? Now momentum is now the thing is Nifty has climbed back. Don't know whether it will sustain tomorrow or not, but it is now in the sideways on momentum, on the short term momentum. It is on the medium term also, it's in the sideways momentum. Now Bank Nifty is in the bearish zones, continue to be in the bearish zones in both short term and medium term. So that's what Bank Nifty has got more bearishness as of from the momentum perspective. Nifty has got a bullish divergence we had been talking about last 2 days. It is working, it's in play, it's work in progress, and the potential target could be 16,790 level. Up to that it can go. So it is not necessarily go, but the target is that you can target up to that. That is exactly where the second resistance to be taken out is there. So that may give a hope that the market can move at least till the next gap levels upwards because of the divergence, right? So momentum and divergence in favor of Nifty, momentum and no divergences, but momentum is not in favor of Bank Nifty. It's bearish. Trend is still in the bearish zones. Some kind of dip has happened in the bearishness, that's all. There is a bend that has happened on the strength of the. So whenever this bend is taking place, there is likelihood that it can fall substantially downside, right? This is the short term daily. So it continues to be DMA negative. ADX is indicator strength that the trend is negative. On Bank Nifty also it is negative, right? So there is a dip that has happened, and the strength also slightly weakened on the Nifty. The strength of the bearishness, right? So basically it's bearish trend that we can see for both the guys. VIX cooled off a little more, 4% more further cooled off to 27.46. Still it is very high. 27.84 is what embedded volatility is. IVP also remains to a very high level of 98.7, right? So 27 is still high, and you have to be cautious and just have to wait till it cools up below 20. Open interest analysis data is maybe very valid for tomorrow's expiry, because look at the range, it's still 1,500 point range of 15,500 and 17,000 the highest put and call ratings. Support and resistances are there seen. Second level is 16,000, 16,800 were the highest put, second highest put and second highest calls are there seen there. So, but it has improved. The put call ratio is 0.73 is kind of little closer to the bullishness. You can see, still not bullish. You can't say it's still bullish. Bank Nifty 32,000 or 36,000, 4,000 points range is what tomorrow's expiry is looked at March 10th. And 31,000 and 36,000 were the highest. Next second level of highest put and call writings are seen. Right? So basically you can see that there is some unwinding that has happened in the calls. That means it's just slightly turned bullish. And highest risks, right? On the Nifty and Bank Nifty also you can see unwinding of the calls. That means the trend is slightly bullish today. Right? So more additions have happened today on the bull side. You can clearly see that on the indices, both of them. No operators have got added. So it has improved from 0.5 level 2.7311. That's what is happening. Long build up clearly seen the futures open interest rate build up also. So so this ranges would give you an idea on where the another way of looking at where the supports and resistances could be, right? Based on the options. This is data based on the options and futures open interest. Yes, it's green day and Reliance, HDFC Bank, and IT stocks in F&T. So all did well. All sectors did well, right? So that's why market moved 300 points up. So index heavyweights view, if you see, you can see that HDFC is showing green. It has bounced from the support zone, major support zone, and HDFC had slipped from the major support zone, but it has climbed back the next second level support from where also it had earlier fallen off. So it's climbed back with the green above that. Momentum is bearish still both on HDFC twins. Both of the momentum is bearish, continue to be bearish. So it's there's no clear indication on where the market is and where it is going to head unless it climbs back at least with sideways zone. Reliance was bullish and remains sideways zone, and a very bullish candle. It's heading towards the channel top where the breakout will happen this time around. So it is already attempted a breakout 3-4 times. It's probably the fifth time. Whether it will break out from here on, we'll have to watch. It was also kind of heading towards the bullishness, right? Not at there. A breakout of a box pattern has happened there, and high volumes, high good rising momentum, and good trend also can be seen on first and also the TCS also, right? Good volume, very good bullish candle, well within bounce up in the channel, within the channel, taken the support and then climbing up towards the next distance. So bullishness momentum also has caught up from bearish ones to the sideways. So overall IT is doing good. HDFC and HDFC twins have done good, but still in the bear zones. Banks generally in the bear zones. This I see in the case of ICICI Bank also. Kotak is only bank which is in the sideways zone. It has taken a support, which is a major support, and it is trying to bounce and move up. But ICICI seems to be weak. Today's bounce was not that great, and it's in the bearish zones momentum, bearish trend. Everything is bearish on the ICICI Bank, although we had a green tick today on the ICICI Bank. So banks generally weak, right? IT is getting stronger because dollar benefits that it may have, and Reliance is doing good. That's a heavyweight analysis. So sectoral performance, if you see IT, out of it's a mixed bag today. So a lot of couple of couple of pharma and reality both had gone bearish. Now it is in the sideways zone, right? Out from the momentum perspective, and the bearishness continued to be there in the auto and FMCG, although they moved up today. Basically, everything moved up today, but momentum is yet to catch up on this auto and FMCG, right? And pharma and reality has recovered from the bearishness to the sideways zone. IT anyway it is sideways and almost nearing the bullish zones. Metal also slightly slipped from the bullish zones into the sideways zone. So four sideways and two bearish sectors overall, if you see, right? So you just have to so right now IT maybe something, IT and metals can be seen to be first reaching the bull zones probably. Metal was about to break out, but it seems to be having a weak breakout and it failed, right? That might have happened. So IT is probably the only sector that's kind of staying strong as of now from the momentum of the price point of view. Institutional participation, look at today's data, 9th March, ahead of the expiry, 4,800, 5,000 crores of selling. So, but yesterday's selling was 8,000 crores in a single day. So half of that, kind of, almost half of that really has happened today, but heavy selling. 39,000 crores of selling has happened in the cash. Just 6 days. 6 trading days, 39,000 crores. So the month is not even half. Means not even the half of the month is reached. So that's a kind of selling. FI is also buying the best, money is getting deployed from the retailers and buying is happening, but huge buying is happening from the FI, from the DI. That is only reason market is staying. huge buying is happening. So no, DIS normally does not buy this. Yesterday 6,500 crores of buying happened to match up with the FIS selling, right? So there is good buying on the dip happening on the DIS. That's holding the market. The foreign institutions continue the selling ferociously. Dollar, uh, so some RBI intervention might have happened, and USD/INR has cooled off from the all-time high levels, 27 plus levels, and it's a red candle, and the moment is taking a dip, but no, there's no guarantee that it will not shoot up again, or it may stay there for a long time until the momentum is cools down to the sideways. Rupee may continue at extremely weak levels. Only 6.5 is very weak for rupee. US dollar index is shot up, but today you can see a red down move. Right, big down move as well. Some cool off has happened on the dollar index. So dollars. So today you can say rupee has gained lightly, but overall it is at a very extreme high, extreme weak level of 76.5. That's not good for the markets also. Crude oil cool off again happening after hitting 120-30 kind of levels. Now it is $116 per barrel. Crude oil price. The momentum is crazy, right? 11-13 year high level prices is what we are talking about, and you never know where it's going to stop. So that is the biggest crisis. The oil crisis is the biggest crisis that the world is facing. All countries, could get impacted by this, but our country is, the most, oil consuming country, so it impacts more. Gold is broken out and it almost touched the 2074.7 all-time high levels. Very close to that, 4 points away from that. So it's great momentum, great volume, great trend, great price pattern, and most likely it is going to take out that all-time high level of 2074.7 very soon. So if the trade was taken at these levels, then they would have gained a reasonable 1,000 points tick on the gold, right? So that must have been very good trade on any of the different instruments of the gold. Global indices, Dow Jones has given up that major support zone, and it is closed with a bearish candle. So that support is gone. That is history. Now the next support is seen at 32.87 kind of level. So you have to watch out whether that holds good or not, or whether it's able to climb above this major support, which will now act as a resistance to climb back. Right? So that's what we will watch out for. Momentum is bearish on the Dow Jones. So basically, US markets have given up the major support zones on Dow and S&P 500 both. Nasdaq is holding on. It has earlier given up the major support zone. Now another one is there in the down, so it's trying to hang on to that. But it is showing some green on the S&P and the Nasdaq. But overall, and Dow Jones, that support is gone is a major concern. So US markets are bearish. Two actionables. Infosys was an actionable yesterday. Today also continues to be there because the momentum is rising up. A breakout kind of things from the box or rectangular pattern has happened. Indicates that it can give good up more, right? But put tight stop losses at the neckline of the box, right? Sun Pharmaceutical also can be a positional trade more often, longs, a weekly and multiple days, multiple weeks swing or positional kind of trade can be taken here, because the momentum is yet to get into the bullish zones, but crossover on the trend has happened well within a channel, very choppy, but the trend is clearly on the upside. So you may get stopped out if your horizon is very short, right? So positional may work, but swing trades for 1 or 2 days it may not give enough benefits. But you can clearly see that it's very choppy, but well within a channel. So when it hits the channel, take the reverse sides trade. When it hits the bottom channel, take the upward side trade. So that's the way it has to be done. But yeah, this is a good. Sun Pharmaceutical could work as a positional trade on the long side. Involves is clearly, it is performing, sector is performing, and indicators are all turning to be bullish, and this kind of a breakout from rectangle is happening. So that's also a long. Wrap up is a neutral, mild bullish, you can say, right? It's also mild bearish. Also. No, it's a mixture of that. That's why neutral is neither bullish, neither bearish. So that's. Although we had a very good bounce up, that is clear. And this view is based on more that we have discussed in on the chart patterns, the support, resistance level, and momentum, sideways momentum turning into bearish turning into sideways momentum on Nifty, bearish trend continuing, Bollinger Bands breakout. All of this what we are discussing. Summation of that, my view, that can go wrong, right? But you can totally come out with a different view based on all of these discussions that has happened on the different parameters. Right? That's perfectly fine. But this is for tomorrow. My view will be neutral or kind of mildly bullish because the bounce up may continue further because the divergence is still there. Right? Basically, 5% recovery has happened and bounce up from after 15.5% of major correction has happened. So it can go a little more up. It's possible. Right, selling pressure is seen. The fire selling is heavy, continuing global uncertainties, war, news floating around, volatility, VIX levels. It's all concerned. Double top. One more gap resistance major is there. Bank Nifty is not that showing full strength. All of these are multiple reasons to remain, very skeptical about going bullish. Right, bearishness is the shadow is always there. So until you have the 17,000 clear on Nifty and 37,500 is clear on the indices. So it may remain a mixture of bullish for 2 days and bearish or sideways for 2 days. Then again bullish, and then so it may remain that level until that critical two levels where the gaps are getting filled. Right. So war uncertainties, fear, and VIX levels are plotting about 27. Means the fear is still there. Right. And tomorrow is about weekly expiry, so that volatility and gamma play will be there. Of course, so we have to be cautious on that. In addition to the global uncertainty, FIS continue 8,000 crores of selling one day, and next day for 5,000 crores of selling. So 39,000 crores in 6 days is unimaginable. Like it's crazy selling. They're just getting out completely. That's what it looks like, right? But thank God the DAs are still there to buy back and keep the mark, keep the faith in the mark, in the economy and the Indian markets. So not too many positive factors are there until the uncertainty of this impact of the war is cleared off. Right? Until then, there's not much positive. The charts may not work as we expect. Levels may get broken. Volatility may move up for 5 days upside, then again immediately reverse. All this can happen very much. So as long as try to stay away from trade if you're not a professional. If the VIX is above 20, if you have to trade, then hedge it. Hedge your investments with gold. Hedge your positions with no option strategies, and buy quality stocks in the dips, right, for long-term investment in SIP mode, not at one shot. Now, option trading, always hedge your positions for overnight positions, and intraday tight stop losses. That's where to go and reduce the position size until the volatility is below 20, and take a wider range, right? It's all the technique that can be used if you have to trade necessarily on the options at this volatile market. So that's a wrap of my view of neutral, mild, bullish, short-term view. So if it helps you to frame your this video helps you to frame your own view and your own trade plan for the next day, definitely consider sharing it to others and then subscribing if you're not, and hitting the like button, commenting. This all helps us to increase our subscription, which is shamefully low right now, and your help in this regard would be highly appreciated. Thanks for watching. Happy trading, happy learning. Bye.